Well, I think it's actually in line with what we've been thinking about the trade deal, that it would not be, a drop date of March 1st or what have you, with everything tied up into a neat bow, but rather there'll be some progress announced around that time, and probably, other issues will take longer periods of time, and we would expect to see things dribble out over the course of some time. So this is really in keeping with what we've been thinking. That being said, there are some stocks that have, run up in anticipation of a great deal, for their particular situation, Boeing being one of them, where we think it just might take a little more time to play out.
Satya, what's your view at the moment? A little more cautious?
We've basically put out a note that suggests to focus more on a visible earnings backdrop. You've got the Russell 2000 that's up 17% in about 7 weeks, and you've got the S&P up about 11%. Basically, the market's forecasting a lot of good news here. One of our key indicators have gone very negative again, suggesting that basically on the institutional side, it's called polarization. On average, what we're saying is that people are just pigpiling into the same names. So leadership stocks, their multiples are off the scales right now. So what it's telling us is that we want to become more defensive. The trend is not going to be your friend, and focus more on earnings visibility as this profit cycle continues to slow.
And Satya, just to dig into that a little bit more, I mean, then as you mentioned, with small caps up as much as they are, the S&P up as much as that is, I mean, does it make sense for investors to take profit here and convert more to cash and sort of sit on the sidelines and see how all of these macro uncertainties play out? Or when you say defensive, is it rotate into more defensive stocks, bonds, et cetera?
That's a great qualifier. The current interest rate backdrop, earnings profitability, the estimates have been pulled back down. It does suggest equities are attractive. The risk we see is that you have certain pockets of the equity market that are very extreme. We've outlined a few. One was aerospace defense, which you already just mentioned, where the multiples there are really at 20, 30-year highs. In addition to that, it looks to us that a lot of growth managers are hiding out in what we would call chicken techs, some of the IT consulting, data processing companies. And then finally, in healthcare, we think that medical devices, life sciences firms, those multiples are trafficking in levels we just haven't seen in decades. So there is quite a bit of extremes that's in the equity market. At the same time, the interest rate backdrop is actually favorable. And so we expect the equity market to be good. I think it's more defensive equities rather than high-octane growth here.
Rick, we always talk, of course, about the Fed pivot and got an update on their thinking today. Have we misframed that in recent weeks and months? Is it in fact a case that the Fed has a lot more flexibility than central banks around the rest of the world?
Well, I think that I've always thought they have a lot more flexibility than any other central bank around the world, because they have 9 quarter-point tightenings under their belt and a significant chunk of balance sheet reduction, which means in the event of something unforeseen, they have some ammunition. I think that's a big positive. I think what everybody seems to be missing is that, we have the VIX at 13, the risk parity boys are packing the portfolios again. Interest rates have been very stable. We're 60 points off the highs of last year in 10s, over 50 points off the highs in the short end from last year. And the stock market likes that, especially with all of that going on, and a Fed that actually has the white flag of flexibility up. This is a green light to build momentum. There's always something to worry about down the road on earnings, but yet none of these analysts have any idea what happens to the global economies when we start clicking all those big circuit boxes and turn on global trade again. Now, I'm not saying that's going to be a barn burner immediately, but I think that starts to, over time, unleash all the things that we've been holding down.